Hello traders, my name is Ray, better known as Samurai Trader to most of you, and I love day trading. My job is to teach you how to day trade the world's best day trading strategies, no matter which market you trade, whether it be futures, Forex, or stocks. Before we get underway, please make sure you subscribe to my channel by clicking the little red button below so you keep up to date with my most recent videos. So in today's video, we're going to be covering a lot of information, and you may notice down here I've actually marked it up as session 1 because I can imagine we might end up with up to 3 sessions on what I'm going to be covering and teaching you. We're going to be talking about how to scalp and day trade and pick up some big home runs on the black gold, on CL, on oil. Initially I was going to do this video on tick charts only, but I've become so reliant on Renko charts and how they work together that I'm going to combine how and show you how basically I use Renko and tick, because I think you'll find it'll give you a big heads up and make trading a lot easier for you. And please remember that whatever I cover here you can apply to all futures markets, Forex, and stock markets. The principles, the exact same setups and principles work on all markets. So as I mentioned, we're going to be focused on tick, but once again with those setups you can use them on any type of chart. So as we get underway, I do need to pull up the disclaimer. As you're going to be watching the recording, please feel free to pause the recording if you wish to read the disclaimer. Pardon me. Now let's start off with income targets. Look, I'll get to those charts in a moment, and I'll get to these and explain these in a moment, but you can actually click on the button below and you can actually download the calculator that I use. And I've got a whole range of calculators, but you can download the one I'm about to display to you free of charge, and there's a little video on how to correctly use it. So I won't get into that here, but please feel free to download that calculator. On top of that, I've already mentioned, please subscribe, visit my website. My program's a $10,000 plus program, the most comprehensive in the world. There's nothing else like this for $197. I don't want to make this into a big advertisement, but go and get my ebooks, visit my website, and become a member. And you can then also of course join me in my coaching sessions. Moving on, let's get into this. First of all, one of the golden rules, and it's almost like a universal law, we must never ever risk any more than 2% as day traders and scalpers. So the scenario that I'm going to be using here is that assumption with the following spreadsheets, and also when we get to the charts. Now what that means is if you are trading with a 10 tick stop, which is sort of, it can really vary on the basis of a time frame that you're using. So I might have a stop anywhere from 6 ticks up to 14 ticks, but let's just use an average of 10. So that's $100 at $10 a tick plus your commissions. So you're going to pay your broker anywhere from $5 down to $3.50 depending on the volume and who you're trading with. Now what that means is you'd need a trading account of $5,200 plus a buffer. If you're new to trading a market, I always recommend you have a bit of a buffer there for a couple of down trades when you first start trading. Now what is important here, and I suppose I should just show you this with TradeStation, my broker. So this is going to vary from month to month and depending on what's happening in the market. Of course, over the last 12 months with the coronavirus, CL, the black gold, has been a very challenging market, very low volume, lots of choppy days. However, as we're now starting to come out of that, we're seeing oil prices start to lift, we're starting to see the volumes lift, etc. So it's getting back to the good old days. Now here TradeStation requires nearly $6,000. Now that's if you're trading after hours during the Globex session, which we will look at in these videos, because there's some great trading opportunities. You need to have around 6,000 in your account. The day trading margin is 50%, but even where they say okay you only need to have $3,000, you mustn't forget the risk parameters. That is, if your stop is $100, 3,000 is just not enough. You need to remember that. And so if you're trading the after hours market, what we call the Globex session, you'll require a little more in your account. So a poor man or woman is not a man or woman without a cent, but it's a man or woman without a dream. You've got to have a target. It's so important. So let's be very conservative here and say if your daily target is only $100 a day. Now for that, we would go for 150. You're not always going to have up days. You're going to have better days. You're going to have some down days, etc. Let's go for 100 net. Now to achieve that, I would need 2 6-tick trades a day, and I'll show you how to do that in this session. Now what that works out to be is that would be 2 $60 trades less your commission. That's $110. And as I say here, we focus on the one trade at a time, because if you can do it once, you can do it again and again and again. Now what this means to you is, and based upon this calculator, every time you double your money, that is, you have another 6,000 in your account, you can now start trading 2 contracts and you can build from there. So this is a very conservative approach, and of course you could ramp it up with a calculator and have a higher risk than 2%. Very dangerous though. But what this means is within 44 weeks, based upon only $100 a day, you've got the potential of increasing your income up to $10,000 a week. If you're after $5,000 a week, it would take you 35 weeks. But what that means is then you've also got 65,000 in your account. And so this is the compound effect. Now for that, I only need 2 6-tick trades a day. Now let's start to get more realistic. If you're trading during the New York session, which really the London leading into New York is the best, particularly the morning of the New York session, tons of opportunities. So 3 8-tick trades a day, and for any members watching this, that's simply 3 2B trades. And by the way, members or traders, I should say, a lot of you are not members at this stage. We've got in our coaching room, we've got 5x5, yes I can, 3x8, yes I can. And what that means is 5 5-tick trades a day on the CL and 3 8-tick trades a day. That'll get you over $400, and that's the mantra. 5x5, yes I can. 3x8, yes I can. It gets us into state. Now what this means is, starting off with 6,000, you have a potential of being up there at 10,000 a week within 18 weeks. Just one more. I'm not even going to bother going to 400 a day, but let's just have a look at 300 a day. That's 4 8-tick trades a day. Now realistically, traders, we need to take what the market will give us, meaning at times if I'm selling into a pivot, I might only be 4 ticks away. So that trade's only going to be, I'm going to be expecting a pivot bounce. Okay, so I might only pick up 4 ticks out of it, which is $40 a contract. So at times we need to be willing to take what the market gives us. But we can see here, we can be up to our 10,000 a week income within 11 weeks based upon 300 a day. If you're after say 2,000 a week, 3,000 a week, or 3,000, you're there in 6 weeks on 300 a day. So the big question is, how do we do that? So once again, you can download this calculator. So how we do it is this. First of all, we want to be trading in the direction of the higher time frame. So we have what we call 3 charts. You can cut one out, particularly if you're a newer trader or if you're finding it difficult looking at 3 charts, and I'll show you how to do that very soon. And so you could have what we call your EC, the entry chart, which is our red line, and the dark blue line is what we call our anchor chart. Okay, so we're looking for pullbacks and back in a direction of the overall trend continuation. Now this is where then we also get some golden divergence trades. Of course, all good trends will come to an end, and then we've got some great opportunities to make money from these great divergence trades. I will show you how we do that also. However, until you're consistently profitable, I highly recommend traders that you stay focused on trend trading only. You know the old saying, a bird in a hand is better than two in the bush. It's very, very important. Master trend trading only with only one or two strategies, and I want you to remember the 34B and the 2B. I want you to drill that into your mind, because I'll talk a lot about the 34B and the 2B. They're the two setups you master. They're both trend following. They both kick butt 70 to 80% of the time. You're going to have a winner. So even better than that usually with the 2B. And then you can consider taking the gold and divergence trades. Now when it comes to trading, there are three main trading sessions. We've got New York, the Asian session, where we're going to drop down significantly the time frame we normally use in New York. Then we've got the London session, where the volume's picking up and will increase the chart time frames. Now if the trade is going to fail, these are the key reasons. Number one, the trader themselves. Either you get in too late, or you've had a couple of losses and you freeze. I spent a lot of time trading traders in the psychology of trading, using NLP techniques, affirmations. It's just so important. Trading is 90% head stuff. However, we need to consider the speed of the market, and if it's too fast, we need to either sit out that trade or increase the time frame that we're trading, because the higher the time frame also can affect our stops. We don't want to have a stop that's too tight, particularly in a fast market. So you've got to know the right stop and where to exit the trade. And that is, I mentioned to you earlier, traders, that we need to consider or take at times what the market will give us, and I've got that on another slide. We'll discuss that in more. The time in a trade, if it stalls, I am a momentum trader. That is, if the market stalls, something may have changed. It may be time for me to exit, and we need, of course, to consider the current trend. That is, most of us are really good solid trend traders, so therefore we need to know how to identify a trend. So here are the key questions that when we go to the charts today in a few minutes, we're going to be asking. Do I have a setup? Does it meet my trading rules? Does it fully qualify? For an example, you'll hear me say regularly, is it an 80% trade? Dick Diamond, who wrote the book Trading as a Business, talks about this all the time. It's really his qualifying question for a trade. Is it an 80%er? A 34B and a 2B, well, particularly the 2Bs, they're the 80% plus trades. Okay, 34B is getting mighty close, and some members will get an 82-84% on that one, but it's got to be qualified. Am I trading it in a trending market? So from there, we want to know, where is our entry? Where do we place our stop? Where do we exit or take profits? Now this is where so many traders fall flat. We need to know where the pivots are, because with pivots, traders, we have what we call a PM and a PB. That is, pivots are price magnets, but they also can cause price to bounce. So if you're buying into a pivot, say 1 or 2 ticks away from the pivot because it's just off screen, you don't know where it is, quite possibly you'll get a bounce and it'll come back and take you out. So you need to know where your pivots are. We need to know where our major swing highs or lows are. And by the way, none of this is rocket science. Okay, where are the major EMAs? One of the biggest things or most important factors that most traders have no idea on. Both the pivots and midline pivots and the major EMAs, they are price magnets. So then, do we have a fixed target, or do you trail the stop? And if trailing, which strategy will you use? If you're trading, say, one contract, I'm a big one, I'm recommending that you stay focused really on having a fixed target initially. Now, how are we going to achieve our weekly and daily targets? And the reason I prefer to say weekly, if you have a target at the end of a week, if you have a down date, it's not so devastating. However, we'll cover how to really minimize those down days, but as you'll see, really how high probability our strategies are. So here's what we've got: retracements and pullbacks, right, where we're going back in the direction of the trend. That's going to be, for most of you, the highest probability. Then we're going to have reversals, and as you'll see, I'll point out reversals real time if we see some set up, and you'll see there that most of those, the ones I pick, will be a good 80 to 90%. But I've been doing this a long time, 27 years, so you need to be very cautious there. There's a lot more to read. So this is our number one: breakouts. I'm not a huge breakout fan. If you do, I really want to take that pullback and that bounce, particularly on pivots. That is, let's just say, traders, if we're in an uptrend and we've got our pivots above, a pivot initially will quite often act as resistance. Once you break through, you want to trade that bounce, because then they become support. Very, very powerful. And then you got range bound, which is I really want to avoid. I really don't like scalping for a couple of ticks. Generally speaking, I like to stay away from chop. So let's now go to the chart. So let me pull up my window there for CL. So what we're looking at here is a one tick Renko. Now this is actually going back here. This is going back a day or two during the Globex session. Now my charts are on Eastern Standard Time, even though I'm down under in Australia. This is Eastern Standard Time, you can see here. Now a one tick chart can be really useful at times. Now by the way, I've got to say this: the sign of an intelligent person is how open they are to new ideas. Doesn't mean they don't verify the idea, it's how open. One of the greatest challenges we've got in the trading industry right now is everyone wants to blame the coach, the teacher, if they don't succeed, where in fact most traders are not committed to trading. They're merely interested. To make it in this business, you've got to become a student of the markets. You've got to be committed. You can't be half pregnant. And this is one of the challenges. So a lot of traders will say, oh, BS, you can't trade that. I haven't said we're going to necessarily trade it. It is a heads up. Now, where we're very early in the Globex session, let's actually, why don't we have a quick look at this right now? There's been some great trades here on the Globex session. So I'm recording this down under in Australia at 10:13 a.m. It's exactly 8:13 p.m. Eastern Standard Time. So after hours, there are some great trading opportunities. Let me just show you this. So the market opened up today at 1800, 6 p.m. Eastern Standard Time. Okay, and usually when the market first opens, I should say, we want to usually give it a good 5 minutes. And we can see here there are a couple of quick scalps into the pivot and into our round numbers, which happen very quickly. So we're usually going to be waiting for this trade, for an example, right there. Now that trade right there, and for any members watching, that's a 2B. Okay, look over at your anchor chart. There's your bounce. Here's your bounce. Look at your long-term stochastic. And by the way, for our pure price action traders, you don't have to use the stochastics or the MACD as long as you're using your EMAs for your trend direction. But you've got a 2B. My entry would have been on the close of a fourth candle. 1, 2, 3, 4, 5, 6, 7. Look, it touched 8 ticks, and that's your classic 2B. Now it's actually not an 80-85% trade, and the reason it's not is you're trading against the higher time frames. And so let me just point this out. I think this is a really good time, and we'll go to the tick charts as well, traders. Just be patient. I know some of you, oh, what are you going to show us on the tick charts? Let me just show you this. The thing that we constantly ask in traders, what's the bias of the market? What's the trend bias? Because remember, I mentioned we want to be trading in the direction of the higher time frame. maybe I didn't say it so far, but I say it in every coaching session and every video I record. Okay, we want to be trading in the direction of the higher time frame. Now on our anchor chart 1, so what we've got here is an entry chart 1. This is our entry chart, sorry, anchor chart 1 and anchor chart 2. For some traders, they'll become a little lost looking at the 3 initially. So what you can actually do is you can actually expand that, but just make sure you develop the habit of looking at your higher time frame, because what we can see here, we still have, I'm sorry about the red dots, it's an ATR just there, but we're in a definite uptrend at this stage. Okay, so what I've got just here is we've got, let me just roll over here, we've got a little, we call this a 2D. Now what 2D stands for, 2 divergences. May not look like it, but you've got divergence there and you've got divergence here. Now we want to take this trade, and our target is going to be the cyan line up here. And this is what I mean about taking what the market will give us, by the way, because a very, very high probability we are going to come up here and get a market turn. Now it went a little bit further, but these are major bounce points. They're like pivots. Okay, see how we bounced off a pivot and off a round number? Oil is rather unique as far as there are certain extra lines you want to draw on your charts. That is, you want to draw a line at your 80 cent, your round numbers, 50, and at your 20 cent levels. Okay, because you bounce off these all the time, and pivots particularly are very important. And this particular dash line is what we call a midline pivot. That's the 50% level between a main pivot. Okay, it could be between the S1 and the floor pivot, or the floor pivot and the R1, which resistance 1, etc. Now you just saw that pop down very, very quickly, and notice how it popped down to the 80 cent level there. Did you see that come down? So it's very important in learning how to trade oil that you understand. For an example, with oil, we've got what we call the 10 o'clock shock on most days. You've got the 210 an oil shock. You'll also have oil opens up at 9, not 8:30 or 9:30. So there are little nuances, but you can do really well, because remember here, just going back to this very quickly, on just 200 a day, 3 8-tick trades a day, look at your income potential. It's huge, it's outstanding, but you just want to learn how to trade these. So what we've also just seen in this Globex session, that this is very fast, so you can use that, and I'll actually show you here on my DOM and on my trading DOM. You'll see here that I will have either a 1 tick, and you can't really see it in there, a 1 or 2. So at the moment, here's my DOM, and we can see plenty of market depth for a 5 to 10 contract trader. And we can see here we're breaking lows of the day here right now. That, by the way, is for existing members. You've got a slingshot and a 21B there, as you can see. I'm really going to be talking about the highest probability trades in this series. We'll be talking about the 34B and the 2B. They're the highest. The 21B, by the way, traded correctly, is a great setup. Okay, you'll have probably a 72 to 75, 76% win-loss ratio if you trade it correctly. That is, where in a trend. But I recommend really focus on the 34 and the 2Bs to begin with, and go from there. Okay, so plenty of market depth. So as the market picks up, for the, if I was trading London tonight, I would increase this next to a 2 tick. And what I've then got, of course, I've got multiple screens. I've just dragged this down to give you an example here. So let's now have a look, and let's discuss tick charts here for a moment with oil. Is we can see the difference here in looking at a 50 tick. Now there's so many philosophies, and no one is right or wrong when it comes to what size tick charts to use. For an example, right now it's early evening in the US. So where normally I would use a 233 tick chart for trading the New York session, where you can drop down to an 89 tick, and let me just show you. That's an 89. Whoops, no, it's not. Did I click on the 89? What have I done there? I see what I've done here. Sorry, I've put the wrong chart up there. So normally I'd have an 89, and you'll see there's not a big huge difference. Okay, gee whiz, I'm actually going to pause this. I want to set this up. This is an important point. Just a moment. Okay, that's better. I remember what I did there. I was showing someone how they can drop the time frame down, and I didn't put it back again. So what I've got here is the 89, a 233, and a 610. Now it's very important the time frames that you establish for any market that you trade and how you jump up. Okay, because there are certain key points, little known secret about EMA bounces, how they all bounce at the same time. But what's important for that is the time frames that we choose. Now if you don't believe in Renko, there's no need to use an 89 tick. You can drop down to a 50 if you want, and use a 150 and a 450 tick. But we can see at the moment how untidy our charts can actually look. Now these white paint bars, that's called the super scalper. Let me just turn my scalper off just for a moment and just make it a little more clear there for you. So we can see we've been open actually for 2 hours, and there hasn't been a great deal of action on the tick charts thus far. But look what's happening on the 1 tick. And a lot of these major moves you've been able to pick up, like at 21B, it's just picked you up 6 ticks. Okay, so taking that 21B, and for all members in the room, and for sorry, I keep thinking I'm running a live session, for all traders I should say, what we've got there, that's what we call a fanning of the EMAs, because one of the most critical factors when we're trading tick, time-based charts, etc., do I have a fanning of the EMAs, because that is what proves up what's happening. Now just see this right here. So I'm looking for a turn in the market right here now, by the way. All right, we've come down to a major support point. We've got what we call a 200 EMA overshoot, and in a moment we'll just see if we get a turn here. Okay, usually we do. Now if we do get a turn here, there will probably be a nice little scalping opportunity, so we might even come back to this. All right, now to get a turn confirmed, see that white paint bar? I would need the white paint bar in 3 higher closes. Now the great thing about trading the really low time frames is our stop loss. For an example, if you're trading this little white paint bar and you use a buy stop, whereas you can put it in advance, you'd be in, and there's no reason, there's not a qualified trade there. But if you were trading that, you'd be in up here, your stop would be there. You've only got a 6 tick stop, which is $60. Look at this. Now remember earlier I was saying to you about knowing where your pivots are. Look at this. Now let's see what happens with the next 4 or 5 ticks now, because now we've dropped down, and I'll just tell you what that is there. Here's a really good lesson here on pivots. Yes, so that's the S1 down there. Now the S1 stands for support 1. Going from the floor pivot down to the S1, you've got about a 94% chance you'll usually stair step down. Remember earlier I said to you that as you break a pivot, you come up support, you want to be trading in the direction of the higher time frame. Okay, so here we've got here, and what we're expecting now is a pivot bounce. I want you to notice here we've got some divergence here, and we have some divergence there. Now right there, now there is a 2D, a qualified 2D. Remember up there I said you'd be in on the 4th candle. Okay, that's using a buy stop. What you actually do, traders, when you're trading Renko, one of the beauties of Renko is you can put a buy stop in advance. Okay, that is, see this last red brick down here? As soon as you have that red brick come down, there's a little formula that we use where we count so many ticks up and we put a buy stop in as soon as we get our first green candle. Then if it keeps falling, it doesn't matter. But you'll see quite often, particularly on the lower time frames, you'll get some really fast rapid moves, and so you want to be stopped into the trade. Now, as I mentioned, this is a counter trend trade, and see that here we now have a 21B here as well. We're not interested in that one. Why? We're right on the pivot. Now my target here, traders, once we're past this 80-cent level, is the cyan. This is what we call a 2D trade. We've got to get past this, past the 80-cent level. So remember, what was once support becomes resistance, so that can be a really strong level. Now I've got a 6, if I was in this trade, I'd have a 6 tick stop, $60. So I'm after a minimum of 6 ticks, but I would go to break even at +4. So what we've got here is a 2D pivot bounce. But let's have a look what's happening on the tick chart at this stage. Now with the tick chart, we can see here I've got a little bit of divergence just here, none on the anchor charts, and as you can see, they don't look as tidy. So why still use tick charts? Well, tick charts at times will still give you some incredibly valuable information that you'll miss out on the Renko. Okay, so right now we'd see here, let me put the white paper, you'll see it'll plot right at that point now at that low. And I've got the super scalper set up for NinjaTrader, for TradeStation. We've got a version of it for Thinkorswim and MT4, and if you don't have it, it's a simple little pattern, but once you understand the pattern, you'll understand why it's plotted. Now why is that not plotted? Let me just check that. It actually I've got 1 2 3. Okay, I see why it hasn't plotted. Okay, I've got to actually plot back, I've got to have a minimum of 3 down candles, but I had that one just there. So anyway, bottom line is that their traders at this stage on the tick, and notice here the differences on your pivot levels with tick, floor, and that is a weekly pivot. Okay, so with floor pivots, they'll behave differently whether you're trading tick or Renko. So how I have mine set up, and I'll finish this recording, I'll do another session, is this: I will have my tick charts above. I've got 6 screens, so I'll have my tick set up like this above my Renko. So here I'm looking at a 2, a 4, and a 7, and so this time of day I would be looking at the 1 tick. Yes, I know it pops at times, but you can still pick that up, because even with the where is it here? Well, let's show you this. So see here, I've got the 1, 2, and the 4. Well, you can't really see it's a 4 tick, so even if the 1 pops, I'm still watching the anchor chart 1 will still identify the pattern for me. All right, I'll finish this one up and let's continue, because we haven't even got into the meat and potatoes yet. So I'll see you on the next video. And just to pin a little advertisement, of course, make sure that you download my ebooks, get hold of my free calculator just in case you get distracted. And for $197, traders, you can join me. It's the most comprehensive. Is over 200 hours of online instruction. There are dozens of handouts, over 35 PowerPoints. Okay, there's nothing else like it. So anyway, come and join me. My coaching is only $97 a month. After the first month is free. If you choose to stay with us for the first month, it's $97 a month. Cancel at any time. Okay, see you on the next video.